All right, welcome to The Explainer. Today we're diving into the mind of a legend, Stanley Druckenmiller. We're going to break down a massive strategic shift he just made, a billion-dollar bet that gives us a huge clue about the future of AI and the American economy.
You know, this piece of advice right here, it came from his old mentor, George Soros, and it basically defines Stanley Druckenmiller's entire playbook. I mean, this is a guy who averaged 24% annual returns for decades without a single down year. His secret? Extreme conviction followed by decisive, all-in action.
And he just put his money where his mouth is, big time. This past quarter, he jacked up his fund's exposure to U.S. stocks by over $1 billion. Now, this wasn't some minor portfolio tweak, this was a thunderous statement.
Yeah, so the big question is, where did he just aim for the jugular? This was a huge, aggressive pivot from the more defensive, cautious stance he had earlier in the year. And lucky for us, by digging into the public filings, we can see exactly what he's betting on. And more importantly, figure out why.
Okay, so let's get into this pivot. First, we've got to understand the key document that reveals it all. So, every 3 months, these giant investment funds have to file something called a 13F. It's basically a required peek into their portfolio, showing us what they're buying and selling. And Druckenmiller's latest one, which dropped on August 14th, well, it wasn't just a few minor changes. It revealed a dramatic, fundamental overhaul.
And when I say dramatic, I mean it. Check this out, a portfolio turnover of nearly 61%. To put that in perspective, that means for every 10 stocks he owned, he sold 6 of them and bought something completely new. That is not just rebalancing, folks. That signals a powerful, brand new conviction taking hold.
But to really get why he made these moves, we can't just look at the individual stocks. We have to understand his core philosophy. Think of it as the decoder ring for his entire strategy.
It's a really disciplined framework. First, he always starts with the big picture, the macro view. Then, he looks 18 months ahead, trying to see where things are going. Third, when he sees an opportunity, he doesn't just dip a toe in, he concentrates his bets and swings for a home run. But, and this is so crucial, he is ruthless about preserving capital. If his idea is wrong, he gets out, fast, no emotion.
And that 18-month rule is the key to everything. The moves he just made, they're not about today's headlines. They are a massive bet on what he believes the world is going to look like a year and a half from now.
All right, so now that we have the playbook, let's follow the money. It's time to decode his big bets and see exactly how he put that doctrine into action.
And wow, this table just lays it all out, doesn't it? Look what he sold off. Amazon, Capital One, gone. He slashed his holdings in the e-commerce company Coupang. These are all bets on the consumer. And where did that cash go? Straight into the foundational pillars of AI and some very specific bets on healthcare.
So the first big theme, the really big one, is this incredibly sophisticated bet on the AI revolution. But he's not playing it the way you might think. He's not just buying the flashiest AI names out there.
See, he isn't betting on who's going to win the AI gold rush. He's buying the companies that sell the picks, shovels, and railroads to all the miners. He's buying the railroad. That's Microsoft's cloud that all this AI has to run on. He's buying the foundry. That's Taiwan Semi, the only company on Earth that can make the most advanced chips. And he's buying the picks and shovels, a company like Entegris that supplies the critical materials to make those chips. It's a bet on the entire infrastructure of the revolution itself.
Okay, so beyond that really specific AI play, he made another, much broader bet. This one is a direct and unambiguous bet on the strength of the entire U.S. economy.
And he's playing this in 2 ways. He's betting on the S&P 500. That's your mega-cap companies like Apple and Google. But he's also betting on the Russell 2000, which is made up of smaller, more U.S.-focused companies. What he's signaling is a belief that the U.S. economy is not only strong, but that the growth is about to spread out. The party isn't just for the big guys anymore.
And finally, on top of those huge macro bets, he's also making some very specific, almost surgical wagers on individual companies that are on the verge of something big.
This right here is a textbook go for the jugular move. He found this biotech company Insmed that had a potential blockbuster drug waiting for FDA approval. So what did he do right before the decision? He boosted his stake by almost 65%. And then on August 12th, boom, the approval came through. It was a high conviction bet on a single event that paid off handsomely.
So, what's the final verdict here? When we put all of these clues together, getting out of consumer stocks, betting big on AI infrastructure, the broad U.S. economy, and these specific healthcare plays, a single, coherent vision for the next 18 months starts to emerge.
See, this isn't just a random collection of stocks. It's a portfolio built around a single story. He's expecting strong U.S. growth that spreads to smaller companies. He's convinced the massive spending on AI isn't a bubble, but a long-term, durable trend. And he's using specific healthcare breakthroughs to generate returns no matter what the rest of the economy does.
So in the end, he is betting over $1 billion on an AI-fueled American boom. And that leaves us with the big question, doesn't it? Is his 18-month vision our future? Well, one of the greatest investors of all time has put his chips on the table. Now we just have to watch and see if he's right. Again.
All right, the learning doesn't have to stop here. If you want to explore even more, I've built the perfect place for you at sophie-ai-finance.com to unlock a new way of learning. Think of it as your personal learning toolkit. If you just want the big picture, you can watch the video or listen to the podcast. It's perfect for getting the main concepts down while you're on the go. But if sometimes you need to hit the pause button and really let an idea sink in, you can visit the blog article. It has all the details, charts, and text from our discussion so you can review everything at your own pace. And for those of you who want to see all the math, data, and the complete nitty-gritty behind the analysis, well, I've got a full research paper waiting for you, so you can really dig into the details and see how everything works under the hood. It's all there, all for you. And hey, if you have any ideas for new topics about finance and AI you'd like me to cover, please leave me a message. Thanks for tuning in, and I'll see you in the next video.